you think about interest rates kind of generally hit everybody, but some sectors that were struggling the most haven't had a chance to refinance yet, and they were waiting to get kind of back into kind of normal operation.
Joining me today is Tom Wilkin, partner and U.S. REIT leader with PwC. Tom, thanks so much for joining us.
Thanks, Matt. Good to be here.
Now, you have more than 35 years of experience in the real estate industry and seen all kinds of market ups and downs. How would you describe the overall health of the listed REIT market heading into the second quarter of 2023?
Well, let's think about, I've been here for 35 years. A lot has happened in those 35 years. But incredibly, the last 3 years is just unbelievable what's going on. A global pandemic and all the societal changes that are coming through with that. That's only started 3 years ago. It's been a long 3 years. Then the energy spike that was exacerbated by the war in Ukraine, causing inflation, the Fed's response to the inflation, raising rates by over 300 basis points in a very short period of time, and the add-on impacts of that into the financial markets, which we're seeing now, almost predictable, but it's hitting here now. And hopefully this is a very short issue and alleviates very quickly, but that has a significant impact on the real estate space. Talking about the REIT market in general, it's hard to do that because it's not monolithic. It's all about property types and the impacts, and everything I just talked about is very uneven across those property types, right? So if you think about interest rates kind of generally hit everybody, but some sectors that were struggling the most haven't had a chance to refinance yet, and they were waiting to get kind of back into kind of normal operations. Now they're stuck, right? So they're now having problems with their issues.
Now, amid that backdrop, what do you expect in terms of REIT M&A in the coming year?
The M&A volume currently is way down, given the uncertainty of the many things that I just said, including the ability to finance those transactions in the current financial markets. Is a struggle. So I think some of those issues are going to take the volume down. You saw some going private transactions that were funded by the private funds and the NTRs. Those are slowing down too, so you don't see as many of those with the heavy equity components coming into play. And I think it'll be slow for a little while yet. Now, all of those uncertainties create opportunities, and I think at some point it'll reverse and you'll start to see a pickup. I think before that pickup happens, we need to see some, call it price stability in the financial markets, as well as some more certainty of what's going to happen with these longer term trends in the particular property types, and quite frankly, price discovery on what the value of the real estate is worth at this point, given how fast things have moved. So I think it'll pick up later in the year or earlier into next year, but it's going to be slow for a little while.
And speaking of slow, IPO market's also been very sluggish. What are your thoughts there?
Yeah, I mean, for a lot of the reasons I just went through, I think the IPO market is going to struggle for a while. I think it's going to be a net reduction in overall REITs. You're still going to see some M&A activity and going private transactions, so the kind of negative part will overcast the IPO market. I think talking about traded REITs versus non-traded REITs, on the traded REIT side, I think you really have to come with a property type and a volume that's kind of underserved in that particular property sector, and there's not many of those that are kind of meeting those conditions. So I think it's going to be an uphill battle to get kind of a traditional property REIT public in the near term, especially given the financing conditions that are out there, that most of these deals require some level of financing as well. On the non-traded front, you're just going to see a continued expansion of those products. Those are being raised, they're technically IPOs, they're not traded. Those are being raised by the asset managers as kind of a fill-in to their product offerings to bring in what in essence is a open-ended fund structure to the retail market, if you will, through the SEC filings. So I think those will continue to expand. Most of the large real estate players, and wealth management type players will have one of those products out there, whether they raise enough capital similar to the Blackstone folks or that slows down and contracts. We are seeing net distributions coming out of those where we hadn't seen that in the recent history. So we'll see how those play out as well.
And finally, is there an issue or trend that you're watching that may be a little under the radar in terms of the impact it could have on the real estate market?
Well, like anything, all of those issues that I just went through, all those market conditions have knock-on effects that are a little bit unexpected. For example, the heavy ESG stuff that is coming out, including the SEC proposals, at some point, those are going to shift into the underwriting standards, and is that going to have an impact on the loan side? And how is that actually going to play out? Some would argue that potentially it'll be difficult to finance a hotel on the beach in Florida. Is that, with those types of ESG issues, is that really what's going to happen? I don't know. So we'll see what's going to happen with those in the long run.